you guys, it's Chrissy and I am back. I feel inspired and I am ready to shoot another YouTube video for you guys. And I have some good stuff in this video, so stay tuned. Make sure you watch to the end. Not only does it help with the YouTube algorithm, it also helps to reach my watch time. Please like this video as well because that also helps with the YouTube algorithm. So come on guys, let's get this channel rolling. Let's get this channel out there. Today I want to talk a little more about term life insurance and why I believe it's better than a whole life policy. Okay, so when I was 23 years old, I purchased a whole life policy. And at the time, I didn't really know anything about insurance. All I knew was I had a house, an insurance salesman came to my door, and I purchased whole life insurance. And he just talked me into it. It was really like, at the time, I was not really good with confrontation. I didn't like to say no to people. So I just kind of said yes. And I went through with the whole life insurance. And the amount that I got was small. It was $65,000 and my premium was $24 a month. I signed up for this insurance because I was just not educated on what type of insurance I should get or why and how much. So I signed up for this insurance with $65,000. It had cash value, and it was enough to cover the mortgage balance in case something happened to me. So that's what I did. I signed up for this insurance and I went on my merry little way for years. And it's been years because I'm not gonna say my age right now, but you could probably figure it out by the numbers I'm about to give you. So I'm not gonna show you who the agent was or who the company is, but I am going to show you my policy that I purchased at 23 years of age. And the loan specified amount was $65,000. And here you can see that amounts to $288 a year if I make $24 payments. So, yeah. So I know what you're thinking, $24 a month doesn't sound like a lot of money, and it's really not. But when you think of all of the compound interest that you can be receiving on that money, it actually turns out to be a lot of money. And I purchased this insurance in 2007. And the reason I love term life insurance is because I purchased it about 2 years ago and I'm getting a $400,000 policy for about $10 more. I know some people out there have term life insurance for way cheaper, but I just decided to keep all my insurances together and I went with the same company for everything because it's convenient for me to do it that way. So I don't know what you're paying for term life insurance, but I see the value in that. Like there's a big difference there and it's not a whole lot more. So I had called my agent who is now retired and I told him I wanted to cancel this policy. I recently just sold the property that I purchased right around the time I purchased this insurance, and I didn't want to get rid of this policy until that was taken care of. So now that that house is sold, I just want to get rid of it. So I called my agent, and of course he tried to convince me to stay. You know, he's like, it's a good deal. It's only $24 a month. You're getting $65,000. You know, it's so much worth it with term life insurance. It eventually ends, and to continue, you're going to end up paying more money. So part of me was like, wow, is he right? Like, am I making a mistake? You know, like that crossed through my mind. And then I just remembered like all of the thoughts, you know, that came in my head when I was first told about term life insurance, you know, and the whole goal is to become, you know, self-insured. So at a point you don't need term life insurance anymore. So currently I have enough in my 401k to cover this $65,000 life benefit. So I don't feel like I need it anymore. However, I was like, you know what? It is only $24 a month. Like, should I just continue paying it? And then I'm like, I could probably get like $100,000 or $200,000 term life policy for this. Why am I doing that? And then it made me go even further. I took out Google Sheets and I just plugged in some numbers, and I'm gonna share that information with you because I was kind of blown away by it. So here's the question. I purchased this policy at 23 years old. Do you think if I would have invested that $24 a month for the entire time until I retire, do you think I would have more than $65,000? Would I have more than $1 million in retirement? I want you to comment below right now. Put your answer below. Okay guys, I'm getting my computer ready here, but I just want to say, if you haven't commented, please do so. And thank you for watching this far, and I hope you stayed to the end. Okay, so I realized I wanted to change to Zoom and I wanted to use my new microphone, but it's one of the lightning ones for my iPhone, so I can't really use it on my Mac. I don't have an adapter. So I am just going to record here, but I will be looking back and forth, and I will share my screen and I will make this work somehow, but you'll see what I do at the end. Okay, so what I'm gonna do here is I am going to, I guess I don't need this video here. Okay, let's just hide that up here. Okay, so I just went to Google and I just saw S&P 500 average return over the past 90 years was 9.8%. I just wanted to use that as my return on investment. So I'm going to go to my Google Sheets document here. It's not a fancy document. I didn't want to spend a whole lot of time on this, but I just wanted to do a little comparison to make sure I was making the right choice. The reason I haven't canceled that policy as of yet is because I can't get a hold of the insurance company. I've been trying to call and they just have me on hold, and I don't know if it's just COVID related, if they're just really busy, but I haven't been able to get a hold of them. And I just been getting frustrated and then just hanging up after like 20 to 30 minutes on hold. But I guess I should just try to get it out the way. But it hasn't been canceled yet. So if after this video you are like, do not cancel that policy, it's a good policy, you should keep it, let me know in the comments below. Let me know your side of the story and why you think I should keep this policy, because at this point I just think it is time to get rid of it, and it was long overdue. I should have got rid of it a long time ago, but I was just like, you know what, it's $24 a month, what the hell. But after doing this analysis, I was like, okay, this is a waste of money, and this is what I'm seeing. Okay, so on my screen I input when I got this policy, which was 2007, and I was 23 years of age, and $288 a year is what I contributed to this policy, and that is $24 a month. Okay, so I just decided to see if I invested this $24 a month into like a Roth IRA, you know, how much would I come out with if I was like 65 years of age, you know, like, or even older when I retire. So I'm just going to change this interest rate to 9.8. You know what? Let's just do 9. For the skeptics out there, let's just do 9%. Okay. So the 288 invested at a 9% rate of return. Okay. So in year 2, I would have $656. You know what's interesting is that I purchased this policy in 2007. This statement that I'm looking at is from 2016. Where does it say that? Oh, right here. 2016. Okay, it's from 2016. And my surrender value, what does that say? $661.72. By year 2, I would have gotten that if I had invested it. So all that time, you know, 9 years, I only get $661 after $288 a year. Interesting. Okay, so let's just keep going. You know, let's see what happens. And it looks like slow growth at first, you know, not even that slow, but it grows pretty fast. And, you know, I'm looking here in column C and, well, column D actually. This is the amount we're contributing per year. This is, you know, as of 40 years of age, $12,000. Now I just want to see how long it would take for me to get to $65,000. So I'm just going to go down. looks like when I'm 56 and a half, you know, I might have $65,000 if I had invested this money. Okay, so there you go. Okay, so this maturity date of this policy is 2084. Let's see how much money I would have had if I invested this $24 a month by 2084. So by 2084, I would be 100 years old. We'll see if I'm alive at that time or not. Do you see that number, guys? Do you see that number? Like, seriously. $2 million, close to $3 million, if I had invested this $24 a month into a Roth IRA. Can you imagine if that was invested in a Roth IRA? Because that $2.8 million, almost $3 million, would be tax-free. You know, I would just, that's just mind-boggling to me. And you mean to tell me if I live to 100 years old, you're just gonna pay out $65,000 to my dependents? Like, does that not sound crazy to you? I'm sorry, you guys, but that sounds crazy to me. So the reason I believe in term life insurance is because you only need it for a specified period of time. You don't need it your whole life if you're investing, you know? So currently, I've been putting away money for years into my 401k since I was younger, and I wish I would have put more. Unfortunately, I wasn't educated enough to make that decision. I really wish I could go back and slap myself in the face and say, put more of your money into retirement. And I bet a lot of people feel that way. You just wish you could go back and talk to your younger self and be like, put more money away, you know? But that's not the case here. But let's say, you know, 2007. So I am just going to see how many years a 30-year policy would give me. Let's see. Okay. 30-year policy would give me $42,000. Okay, and I know that's not $65,000, but ideally you want to invest more. You know, you don't want to just invest $24 a month. But I'm just showing you what $24 a month could give you if you start it that early, you know, and hopefully help you make better financial decisions because of it. Because, you know, I know a lot of people think that they're just never going to get $1 million when they retire. But I just showed you $24 a month if you started at 23 years of age. You know, you see how much that gives you. And at 88 years of age, you would have $1 million if you invested it. So that's just to show you, like, that's $24 a month, you guys. Like, that's, people spend that getting their nails done. People spend that smoking, drinking, going out to party, you know, like, it's all about what's important to you and what your priorities are and what your goals are. You know, if you value going out more than you value your retirement, then yeah, you might not end up with a lot of money at retirement. But, you know, starting as soon as possible is just such a great idea, and it's so worth it. As you see, like, this is $24 a month, you guys. Like, come on, like, eat out one less time a month, you know? And I'm not saying, like, you know, don't do anything fun, you know, I'm not saying that. I'm just saying make sure you prioritize this because it's important. The power of compound interest is just amazing, and it's something that we're not taking advantage of enough. So we need to start educating people and getting this information out there. And that's why I am so passionate about this, because, like, would you have ever thought that $24 a month could get you there? You know, like, it's just, it's mind-boggling, you know? So I also made another column here because if you saw, like, the surrender value, now this was in 2016, I don't know what it is now because I can't get anyone on the phone and this is an old statement, but $661.72. So I'm only assuming it might be $1,000 now. I have no idea. But I just wanted to see if I pulled that out and I put it into a Roth IRA, how much it would be. So as you can see, like, you know, it's nothing compared to that $10,000 I would have had if I would have started investing that $24 a month sooner. So, you know, but still, like, even if I put that $1,000 in and I continued the $24 in another account other than the whole life policy, you know, let's see how much I would have at 65. That's $43,000. Okay, so yeah, that's okay. Let's see for 65. Sorry about this colors here. This is the old spreadsheet that I used, and I just copied it to a new tab and, you know, just started playing with it because I like to analyze things, and I think it's important that we know what we're doing with our money. So 65, between 69 and 70. Okay. My grandma's 80 years old, you know, like I hope I can live, you know, past that age, you know. Hopefully I will. So, you know, it's just crazy. Look at the age of 80, $167,000, you guys. Like, that's a lot. That's a big difference from $65,000, you know. So it's important to analyze these decisions before we're making them. And, you know, even if you do make a decision and then you're like, you figure out it's not the best decision, don't beat yourself up over it, you know. Just make the changes you need to make and move on with your life, because you don't want to have regret, you know. But I'm just showing you, you know, the possibilities of investing, of saving early. Do it as soon as you can. You know, if that was 23 years of age, imagine if you're 21, imagine if you're 18, imagine if you're 16, you know, you just started working and you want to put some money away into retirement. Like, open up a Roth IRA account and just start contributing. It doesn't have to be the maximum, you know. I mean, if you could do the maximum, it's currently, I believe it's $6,000, and you can double check that. It changes every year, so you want to make sure whatever year you're watching this, I hope this video will last a couple years. But, you know, you just want to make sure that if you can contribute the maximum into a Roth IRA, that you are doing that, because that money is tax-free. You know, you're putting that money in after you paid taxes to the government already. So any money that you put into that account grows tax-free. So you don't have to pay taxes when you take any money out of that account when you retire. It's an amazing opportunity, and it's something that a lot of people just don't take advantage of. Myself included. I'm not even saying that I'm doing that currently. Currently, I'm just contributing to my 401k at work, and my husband's doing the same. And that's what we're doing. But honestly, since I was contributing since I was younger, like, I'm already on track for retirement. But I still want to take advantage of that, of the Roth IRA. And I'm looking to do that sometime this year. I'm just getting all my information together, and I am planning on doing that before the end of the year. If you don't have a Roth IRA, maybe just think of opening one. Now, one thing I do want to mention is that if you're not contributing at all, not to your 401k or not to a IRA, then check if your employer does a match, because that's money you're missing out on. If your employer is doing 100% match, like, there's nowhere else you can make 100% on your money. So get that match. I would consider contributing to there first. And that's pretty much why my husband and I are doing it. We're still working on getting out of debt. So, you know, we do want to put money into a Roth IRA, but it's just gonna take a little time for us. But if you have the money, then I highly recommend you look into it and do some homework, you guys. Like, do some research and analyze your own numbers. I know everyone's situation is different, so just look at it from your perspective, from your point of view, and analyze everything to see where you can come out on top. So I hope this video was very informative. I hope it got you pumped up, because you can see that $24 a month can give you $1 million of retirement money at the age of 88 if you don't pull anything out. This is why it's important not to pull money out of your retirement accounts, because of this compound interest effect. Like, just seeing how this works is amazing. You know, like, look how slow it started, and then the money just starts to grow so fast. towards the end. You know, your dollar bills are just working for you. And that's how we need it to be. You know, that's what we need to happen. And I just hope that you can look at this information and it helps you to make a better financial decision. And I wish you all the best of luck in your financial journey, no matter where you are with it. And I hope you come back sometime soon to watch another one of my videos. So if you did comment earlier and you changed your answer, just comment again below and let me know your thoughts. Or if you didn't comment and this information surprised you, let me know that too, you know? So thank you for watching. If you haven't already, please subscribe to my channel. Please like this video and share it if you found it informative and helpful. And I will see you guys soon. Bye.